Both have to wait.
Hi, so we are live.
Oh, yeah, good
Right.
afternoon. We are live. Yeah.
We are live. Yes, so Wednesday, February 28th, and tomorrow is leap year. So you get one extra day to get your contracts in for the month of February 2024. So make sure you get those contracts into us, pre-approvals. We'll get links out there. But today we are talking about alternative loan products, which I'm going to be taking notes because Thomas is amazing at it. So, but that's what we're going to be talking about. It's not just your traditional lending. So there's a lot of information, misinformation as well, that we're going to be covering. So take notes. I think this is going to be an awesome, just an awesome topic. So go for it, Thomas.
What a great introduction. Hold on a second. Let me Zelle you the $50 I owe you. Thank you
Received.
much. Um, Speaking of contracts, get contracts in before we get into alternative loan products, because I'm going to touch real quick on Heroes Money, which is going to come and go in a minute. And I think it's going to be what, March 3rd?
Yes, whatever that first Monday of March is.
I
And
believe.
is it the third?
I think it might be the 3rd, but anyways, if you're looking to get Heroes Money, we need your contracts. So we have your contracts in front of us come March 3rd. If that's the date, I'm almost sure it is, so we can get that money. It comes in quick and it goes just as quick.
I was just gonna say, but last time I think there was $700,000 released. I will tell you that I was at the edge on the edge of my chair. I had somebody that I had to reserve for, and I was able to reserve $27,000 in change for a borrower that's going to be closing next week. I did not have a second option; like that was the only option I had, and the money was actually released, and then it was gone in 3 minutes. Like I don't know. My heart stopped. My palms were sweating. Like I just don't even know. Like my typing class in high school came in handy that day because it was just it goes that fast. So yes, make sure you have your pre-approvals done. Make sure you have your contracts in because that is the only way that we are able to reserve funds.
And again, that's a different type of loan for us. So it's not like in our normal loans, we lock your loan and you know that money's set aside. This is a whole process. Like Elizabeth said, they have to log into the system. They have to be sure the funds are there. Every piece of information has got to be correct. If you've got a borrower and a co-borrower, all that's got to be put in quickly, or you'll lose the opportunity to reserve those funds. These funds are only becoming available because previous reservations have fallen through.
Mm-hmm.
And that's how these funds now become available. And the other thing Elizabeth had mentioned is how much was it? 700,000?
Yeah, it was only $700,000 released that day, and we never know. We never know exactly how much is going to be released. So we have to have everything ready to go. And I mean, I should have just played lottery that week because it's just it goes that fast. I mean, you think about it, and you have so many people that are needing these funds. This is why the program I think has been so successful. Like people do need money for the down payment and closing cost, and they opened that up at 10 o'clock, 10:03. It was done.
Mm.
So, and we didn't know how much was going to be available. So it was just a matter of I mean, it was nerve wracking.
Well, it's 700,000, although it's a lot of money with the prices of homes and stuff like that. That's, regretfully not a lot of money.
Yeah, yeah. I mean, and you think about it, it's opened up to first-time home buyers. So now you don't have to have a specific job. You don't have to anything. It's first-time home buyers. And then if you think about like the state of Florida, all those loan officers trying to, trying to get these funds for borrowers. That's a lot that goes on in a matter of 3 minutes, from what I understand. The time before that, I didn't have any reservations to do, but the time before that, I mean, if I'm not mistaken, I think the system even crashed.
Mm.
So absolutely craziness. But I mean, but keep in mind, it's not a one size fits all, like I call it. Um, there are other options for down payment assistance programs that we can go through with you guys. But again, your first step is going to be to get your application out, and then once you have that, then we're able to give you options. But it's not something that it has to go that way. I've actually been giving people the option of let's try Hometown Heroes, and if we don't have that, then we have a $10,000 bond. We have other programs that we could help with, but so it's not just just that one program that we have. So
And Elizabeth is correct, as usual. We have a tremendous amount of different loan products, but excuse me. But we don't know what loan product is going to be best for you until we sit down and have a conversation about which one would best fit your needs. So that's what it comes down to. So, FHA, VA conventional. I've got a USDA one I'm working on this morning. These are going to be other loan products, though. There is a plethora, thank you very much, which means a lot of loan products.
Word.
Thank you. Thank you. That word made me sleepy. So, but there are loan products. Just let us know once we have the communication, once we know that, have the conversation, we'll know what loan products fit your needs.
Yeah, absolutely.
This is going to be based on alternative loan products. In other words, we're familiar with FHA, VA, conventional, USDA loans. Those are typically known as, conventional or qualifying loan products or agency loan products. Typically, we're going to discuss other options besides those. So there's a picture of the class there. Let me enlarge my screen, and Elizabeth is going to help me page through all these. So Fannie Mae and Freddie Mac are the two government agencies that regulate the mortgage loans. They're the ones that write the rules on what the loan programs and guidelines are for us to underwrite the loan under their Fannie Mae and Freddie Mac guidelines. And those two products is where you get the most aggressive rate. So typically when we first get a customer, our first objective is to go through the Fannie Mae and Freddie Mac handbook, go see if the borrower fits their guidelines. Right. The next one, speaking of the guideline book, is I wanted to take a snapshot of what the selling guides are. So Fannie Mae on the left-hand side of the dark blue is this Fannie Mae selling guide, and the right-hand side is the seller servicer for Freddie Mac. Top right-hand corner, it says Freddie Mac. Up on top, you'll see selling guide for Fannie Mae has 1,199 pages, and the one for Freddie Mac, I believe, has 2,266 pages. So if your income, your assets, your verifications, your employment all falls within those 2,266 pages, then you'll qualify for Fannie Mae and or Freddie Mac, also known as an agency loan. Mm-hmm. If they do not, then these are alternative loan products that we're going to go over.
I'm just the clicker today, okay?
That's okay. ITIN will be your cue. What is a qualifying loan? We just kind of went through it. That's a borrower that could verify their income, their employment with typically 2 years of W-2s. They could verify their assets, whether they're coming from a checking account, savings account, maybe a gift fund. Gift funds might be, of course, we have to document. So these are what a qualifying loan is. A qualifying loan is you can provide all the documentation that's needed that Fannie Mae and Freddie Mac will require. And what is a non-qualifying loan? Anything that you cannot provide. Typically, self-employed people will generally lean towards the non-qualifying loan products. Sometimes self-employed people, well, not sometimes, they have the ability or the advantage to write off certain deductions during the course of their business. They might bring in X amount of gross receipts, let's call it $1 million a year in gross receipts, however, might only show $55,000, $75,000 in income. So self-employed people, whether you're a business owner, contractors, hospitality workers, retirees, of course, realtors are self-employed. Some mortgage loan originators are self-employed. So these are the industries that a self-employed, for a self-employed person that would take advantage of some of these alternative loan products. They may not get W-2s. They may not pay themselves on a regular pay scale. So these are where non-qualifying loan products come in.
Right.
Well, what's a good idea? Once we have a nice consultation or a conversation, then we kind of determine, whether a non-qualifying loan is a good idea or no. If you can meet all the guidelines to do a qualifying loan, then that would be the better option. That one's kind of quick. That one's very quick. That one just kind of goes through all the types of non-qualifying mortgage program highlights. So bank statement loans, which are very popular with self-employed people. We're going to get into that. Most of these loans also require, I think, a minimum score of around a 620 or a 640. Here, some require on the investor cash flow a 680. So here, bank statements require like a 640, and we'll get into either using 12 or 24 months of a borrower's business bank statements. If we take a look at the tax returns and the tax returns maybe show write-offs that the business owner took advantage of, and we find it might be better to use his bank statements instead of the tax returns, that's a great alternative. The next one down is an asset qualifier. There's no employment and really no income on that loan. That's let's say somebody is retired, they have a nice 401k or a retirement account. We could turn those funds into income to help them qualify. Platinum jumbo, that's for an extra large jumbo loan. I-10 mortgage loans.
And a lot of these actually, like the I-10 mortgage loans, foreign nationals, a lot of these we have to be able to see. Sometimes it's either the status of the resident status we would be asking for. There's so many different types of ways that we could do this. I currently have somebody right now that I guess like this, some of the immigration stuff also, changes, but there's certain what I've learned is categories of residential statuses, and sometimes that comes into play. So you want to make sure that we review these. And the other thing I wanted to touch base on also was if you could see, like through all of these, there's different loan to values that we're able to, to go up to. One of the things to keep in mind during these non-QM programs is the fact that the bank is taking, these are riskier, if you would, types of loans. Again, it's not your traditional conventional FHA, USDA, VA mortgages. These non-QM programs will have a little bit maybe more needing more assets. Maybe, as you can see there, some of them are pretty lenient, I think, in my opinion, on the credit score. But yes, definitely on the down payment, on the assets part, your interest rates more than likely are going to be a little bit higher. And it's only because, again, it's a risk factor. You're not fitting into the traditional loan. So the bank is, if you would, taking a risk of giving you a loan based on other things, that you can't really provide. So that's just something to keep in mind, because I know we get questions. And of course, when we send out a pre-approval and the interest rate is not what you hear on the news or you see online or anything, that's one of the first things that people question when you're going non-traditional. But again, it's because we're not asking you for the other items. So it's a risk factor.
Yeah, and Elizabeth is correct. Whenever you don't include something that's required in the Fannie Mae or Freddie Mac loan guideline book, well, Tom, I can't give you my bank statements or I can't use my tax returns because I have a lot of write-offs. Then you run into a higher, a riskier loan, and those investors are entitled to, charge for that risk. Now, it's not out of control. It's extremely reasonable compared to sometimes the advantages that sometimes self-employed people are able to take advantage of on their tax return. So, these are great loan products that really help self-employed people as far as getting into the purchasing something without having to disclose all of their tax returns.
And another one, just to touch base on the self-employment, I know we get a lot of people that just go straight into private investors, what's it called? Not private investors, lenders, just
hard money.
I didn't want to call them loan sharks, but you get into hard money loans, and typically you are paying 100% interest on that loan. You're paying 100% interest on that loan, and usually, what are you talking, like 10 to 15% nowadays? You're still paying a very high interest rate. Interest only payments. So you might as well just go, non-QM programs to see what's out there. So you are going to have, a loan that you're going to be applying principal as well as interest. But eventually you're going to have to refinance and get out of that hard money loan. So, these are options that you have available.
The other thing typically with hard money is they might be amortized over, let's call it 10 years, but they want their money back within 2 to 3 years.
Yeah.
So they might make the payments, so like as Elizabeth said, interest only, but they want their money back within X amount of, they're not holding you out. They're not holding your loan for 30 years. They're not holding your loan for 15 years. So they're holding it for 3 to 5. The other thing I want to touch on while we're on the screen is the investor cash flow, no income in the top right-hand corner. You'll probably see a lot of those going on in TikTok or on social media, DSCR loans or investor cash flow, no income loans. That's exactly what they are. There's their loan to value is about an 80% loan to value. The investor's got to put down 20%. There is no income on those loans. You need a 680 credit score, but those loans are determined by how much the property is renting for. So if you're renting a property for $5,000 a month and the property costs you $4,500 a month, then that loan could be approved. And it's basically that simple. The important things with those investor cash flow or DSCR loans, which stands for debt service, doggone it, DSCR, debt service coverage agreement. That's on the next page, whatever. Debt service coverage ratio. Got it. Debt service coverage ratio. Okay. Is income. I'm sorry, not income. You need credit. I think a 680 credit score. Assets. Assets are important because you've got to be sure that you have enough assets, meaning somewhere in a checking or a savings account or a retirement account, you have at least 6 months or more worth of payments in reserves. No income on those loans. It's just a matter of how much the property rents for versus how much you pay overall for the property per month, and there's your approval. So those are very popular.
And I love the fact that you could go up to 4 units on this, so you can look at a quadplex.
Yes.
For this. So just an option.
Okay.
I haven't seen a lot of foreign nationals in a really long time. A lot of those loans going on. I know that they stopped during COVID, but I know those change from time to time. And I know like the loan to value sometimes changes a whole lot. I know that during COVID, that loan to value was a lot lower than 70%, depending on numerous things. So that's one that we got to look at very specifically.
Yeah, with the foreign national, I think one of my first questions is how are you here on the United States? Probably ask for your visa or how you come back and forth. But this is a quick screenshot I took a picture of from a self-employed individual that had a very good, successful tire store, and I asked him for his tax returns. He brought them to me, and I was able to review them. And after review of them, I think I was able to come up with around $3,000, $3,500 a month in income, call it $45,000 a year, which made it hard for him to buy something. So then I asked him to provide his bank statements, and after reviewing the bank statements, he ended up with $12,671 a month in income. So, it makes a big difference, and he was certainly able to find something with that income using his bank statements versus disclosing tax returns.
Right. These bank statement loans, I think that they give you a lot of leeway with your income. And again, we're not even looking at your tax returns at this point, but that's a huge jump.
That is a huge jump. And I did just let everybody know, we don't go through your banks. Well, we look at your bank statements, but we pass those along to the investor. They calculate how much money that they are able to decipher per month. So once they come back with that number, if that number works, it makes it a lot easier than going through tax returns.
Yeah, and it's not just your deposit totals, because I've had people, in the past kind of almost argue with me that, I've been depositing such amount of a month, and it's not based on that. We have to be able to source the deposit. So if you're depositing $20,000 a month in cash into your bank account, we can't just take that in addition to your payments, meaning from a check or Zelle payments or whatever. I have had Zelle payments be approved just because obviously, like in the notes or something that looks normal, that's got to be part of the business. It can't just be all of a sudden you start depositing cash into your business account and then expect us to be able to count it. The other thing is also the people that are self-employed. I've had people that's done this, 2 different ways. It's either going to be a business account, which I think, in my opinion, are usually a lot easier to figure out the income that we're able to use, the eligible monthly income. If if you're using your personal bank account, I think there's a lot more questions that come up, because they do have to go line by line on those deposits to make sure that, is it really coming from your business, or is it a personal transaction? So those get a little bit more questioned, I think, than the than the your regular business bank accounts.
Yeah, the perfect situation is that if you have a borrower that's has a business account, putting their money in that business account on the regular basis. We've come across it where sometimes the money goes into my personal time, sometimes it goes into my business, sometimes it goes here, sometimes it goes in the mattress. That gets a little bit convoluted. We would love to have all the funds going into a business account, have 24 months of that or 12 months of that,
Mhm.
and this way we can get a good idea on what the income is.
Yep.
The other borrower is same situation, basically, wasn't able to really work with her tax returns, self-employed, has a restaurant or two. And then asked her for the bank statements, turned those in, and we came up to 135,692 a month in income. So she was able to certainly get what she was looking for with that income. Yes, was her interest rate a little bit higher, like we discussed? Of course it was. But look what we were able to provide to her, and her goal was to acquire the property.
Mhm.
So with some of these loan programs, Elizabeth and I, we don't get paid on rate. We would love to give it to you with zero down, zero per month, and that's it. But that's not our call. The rates with these programs are slightly higher, give or take a point, more so than the Fannie and Freddie, but they're well worth it.
Right. If at the end of the day, if you are ready to purchase a home, and we can't tell you when that is. I mean, if it's your time to buy, we're just going to have options for you. Obviously, it's entirely up to our borrowers to pull that trigger and say, yes, I'm going to go ahead and move forward with the transaction. But there are so many options that we can give.
And we're coming close to tax season. There are self-employed people out there. There's several hundred of self-employed people listening to us now. So your taxes is coming up. So be sure, if you're looking to purchase a property this year, that you've got your tax returns squared up. This is just some of the debt service coverage ratio benefits. It could be interest only. You could do cash out on a property. You can close in the name of an LLC. There's unlimited number of finance properties. I've got a very, very, very loyal customer I've been working with for over almost going on 10 years now, who is going on, I think, 5, maybe 6 duplexes that she owns, between 2 and 4 units. So that's a great loan program if you have multiple properties. FICO and DSCR we've talked about. This is basically how it works. So you got rental income of $5,000. You've got the expenses for the property, the principal and interest, your taxes, insurance, HOA fee is $4,500. Divide one into the other, 5,000 into 4,500, you get 1.1%. There's your approval. Mm-hmm. Now, you could get, let's say, for an example, it doesn't come up to 1.1%. Let's say, for an example, the rental income is $5,000 and your monthly expenses are $4,900 or $5,100. You can go below 1.1% on the rental on the DSCR qualifying number. However, there just might be a cost or an add-on to the either rate or the cost of the loan, maybe another 0.5 point. But if it's under 1%, you could still get qualified for the loan. And I want to just touch on something else. Where we determine what the monthly rent is going to, how it's determined what monthly rent we're going to use is when we order an appraisal on the property. The appraiser is also going to do a rental analysis to let us know how much the property is renting for.
Mm-hmm. And it is going to be based on a 12-month. I know that out here in Wellington, I get this question a lot. Seasonal rentals, Airbnbs, doesn't work that way. I mean, I know you could make a killing, but it's not, we have to go by a 12-month rental, correct?
Yes. This is just, I think, a quick little rate sheet or that goes through options for foreign nationals on 5/1 arms. Rates are running about 8.25. Those loan to values are 50, 60% loan to value on foreign nationals.
Hmm. This is what I was referring to, that depending on, and there's so much more that goes into this, depending on credit, depending on country, depending on so many things, that you are going to be, uh, you are going to be required to do a little bit more. So, yeah.
Yeah, on that previous slide, the country of origin is important. And again, we're back to, you could see how the loan to values, I'm sorry, loan to values differ depending on the country of origin. So foreign nationals, yes, we do have loan products for you. The best thing to do is just get us your visa.
Hmm.
Um, That's okay. This one's basically on bridge loans. I'll make this one pretty quick. If you're selling a property and need some money or equity from that property to float you over until you close on the new property, those are also available. Bridge loans are typically 11-month terms, which means they need to get paid off within, of course, 11 months. For a primary or second home, interest-only payments. Bridge loans, because they're short-term, could be a little expensive. Again, maybe 3 points going into them because they're only good for 11 months, but they are a good option in the event that you have good equity in one product or your primary, let's say, and you're looking to move to another primary. Getting some equity out of there could be an option using a bridge loan.
Hmm.
Also could be an option using a home equity loan. So, if we were going to suggest something, we would suggest a home equity loan first because it's a little bit lower on costs. But if that doesn't work out, a bridge loan is an option. Annuitization of assets. We discussed this if you have retirement funds, and I think I'm approaching somewhere around 59 and a half years old. You've got money in an IRA, a 401k. What we're able to do is take the funds that are in that IRA or 401k account, and we're able to monetize those funds. Let's say you've got $500,000 in a 401k account. You divide that over 37 months, and that will give us an idea on how much monthly income we can use by monetizing your retirement.
And the 59 and a half is a big deal. I had somebody that was like 59 years old, and they were just upset because their birthday couldn't come that, fast enough. And I said, obviously I couldn't change that. I had to wait. But that is something we can't just bypass and say, it's all right. We will just look the other way on that half. It doesn't work that way.
Yeah, looking the other way, regretfully, doesn't exist in this industry anymore.
No. So we already went over this one, right?
Yeah, we can go back to the last one or the one before that. Maybe if not, it's not that big of a deal. There we go. So with that 37 months, what we would need the borrower to do is take a draw, maybe, one draw out of their retirement account or 2 draws, whatever it's going to take until closing. And after closing, you can continue to take those draws if you decide to. And if you decide they're not needed, you can most likely call your financial advisor and stop those draws. So, but that is a good way to annuitize your assets. Mm-hmm. Without using, if you don't have income, employment, or if you're on a fixed income, Social Security, something like that. However, you got a pretty good chunk of money sitting in a retirement account. That's what this is for.
Yeah, and the 37 is just because we have to show that it is going to be, you are going to be receiving this income for the next 3 years. And that's also for a lot of other programs that we have. You guys have heard us maybe what's it called? Getting paid alimony, child support,
pension.
Yeah, pensions.
Everything has got to be at least 3 years. So we all know 3 years is 36 months, but in the mortgage industry, that's not good enough. It's got to be 37. Mm-hmm. And I think that's just basically a duplicate screen on some of the products that we offer. This is just a little bit of, I'm looking at my picture here because I've got what you got to say there, like a $10 million house close to it.
That's definitely like some type of DSCR jumbo, like platinum jumbo loan or something.
So I think on my next ad, I'm going to put, the low to moderate LMI products there that we know that people do. No,
Yeah.
I know this.
But
Yeah,
in reality, like just the what loan is right for you at the end of the day, we just keep saying this until we have everything in front of us and we have a conversation, we're not going to know which way, to what direction to point you in. So, that's why we want to make sure that we have all the information that we can get from you, a full application. We will ask, and I usually say it's not to be nosy, but yes, Tom has corrected me and said, yeah, it is to be nosy because we want to make sure that we get, whatever we need, for you guys and just to gear you in the right direction.
yeah. I mean, we're asking the questions because it's certainly better for us to find out in advance, than finding out when it's too late. It's always better to try to eliminate a problem than then try to fix a problem. So we pry because it's important. So, but we also want you to go to a closing. That's the biggest thing. You're signing a contract. Another thing I want to kind of bring up is that when you sign a contract to purchase a home, you're signing a contract to purchase a home, to perform. And we're the ones that are obligated to get you at that closing table. So that's why we kind of do what we do.
Yep. And so just to pretty much wrap up there, again, there's so many different types of loans that we could do other than just your traditional loan. So I hope you at least took one thing away from this, and just know that as always, we're always here to answer questions you may have. So just feel free to reach out to us. It's 12:31 now. So that went pretty fast, but if, again, just reach out to us if you have any questions, like our page, share this information. You never know, maybe a friend or family member can benefit from this. But other than that, I have nothing else. With you, Tom?
Yeah, please share our page. We appreciate it. If you know anybody that's looking to buy, sell, or refinance, we would be honored to hear from them, and certainly hope you share our number. So thanks for tuning in, and share the video. If you know somebody that might be interested in this type of loan product, please share the video. It's Share Wednesday.
We always have these videos. We actually keep them on our Wellington Lake Worth Facebook page. So if there's ever a topic that you missed, or you just couldn't make it to, or you just want to go back to see what we've talked about, because every single week we have something new, go back and check out our videos. We keep going, and if you ever have a topic that you want us to go ahead and talk about, maybe just reach out to us. Let us know. We want to know what everybody out there wants to know, and we'll do our homework and make sure to provide the best information we can.
If you're having trouble sleeping, you can always put it on in the background.
Yeah.
All right, everybody. Have a good afternoon.
Have a good day. Bye-bye.
Thanks. Bye.